Have you ever heard that renting is throwing money away? This is a common belief, but in 2024, it couldn't be further from the truth. Today, investing in rental properties, whether houses, commercial warehouses, or shopping centers, can be one of the smartest financial decisions you can make. In this video, I'll show you 7 detailed reasons why renting properties is not only not a waste of money, but can be a highly profitable strategy. If you want to understand why the rental real estate market has so many advantages, stay with me until the end. I'll show you how this approach can guarantee a stable income stream, financial security, and even wealth growth. Let's dive in. Reason 1. Constant cash flow, guaranteed passive income. The first reason why investing in rental properties is not a waste of money is the constant cash flow these properties generate. When you invest in rental properties, whether it's a house, a commercial warehouse, or a shopping center, you create a source of passive income that flows into your bank account every month. This cash flow is often superior to many traditional investments, such as dividend-paying stocks or fixed-income bonds. Well-located and properly maintained properties tend to attract quality tenants who pay rent on time. This rent can cover all operational expenses of the property, such as mortgage, taxes, maintenance, and still leave a profit. And the best part? This income is recurring and predictable. While stocks can be volatile and dividends can be cut, rent is a contracted agreement, ensuring that you receive your money every month. Moreover, the cash flow from properties can grow over time. Rental agreements often include annual adjustment clauses, meaning that your income will increase over the years, keeping pace with or even outpacing inflation. In 2024, with global inflation still a concern, having a source of income that adjusts to the cost of living is a significant advantage. So instead of seeing rent as an expense, view it as an opportunity to build a stable and growing income. Reason 2. Property appreciation, increase in real estate value. Another powerful reason to invest in rental properties is the appreciation of the asset over time. Real estate has a natural tendency to appreciate, especially when located in areas with economic growth, urban development, or regions undergoing infrastructure improvements. This means that in addition to generating income through rent, the value of your investment can increase significantly over the years. Property appreciation occurs due to various factors, such as population growth, increasing demand for housing or commercial space, and the scarcity of available land for new developments. For example, commercial warehouses in strategic logistics areas are in high demand with the growth of e-commerce, which can quickly increase the value of these properties. Similarly, well-located shopping centers in high-income areas tend to appreciate as the surrounding area develops. When you invest in real estate, you're buying a tangible asset that has intrinsic value and cannot be infinitely reproduced. Unlike stocks, which can be issued in unlimited quantities, land is a finite resource, ensuring that its value tends to increase over time. This growth in property value can represent a significant capital gain if you decide to sell the property in the future. Furthermore, property appreciation also offers the possibility of refinancing. If your property's value increases substantially, you can refinance the mortgage at a lower rate, withdrawing some of the accumulated value to invest in new opportunities without needing to sell the original asset. This allows you to expand your portfolio and further increase your income and wealth. Reason 3. Tax benefits, reducing taxes and deductions. One of the less talked about but extremely valuable advantages of investing in rental properties is the tax benefits that come with this type of investment. Governments in many countries offer tax incentives to property owners who rent out their properties, allowing them to deduct a wide range of expenses related to the property. This can include mortgage interest, maintenance costs, insurance, management fees, and even property depreciation. For example, in the United States, the IRS, Internal Revenue Service, allows property owners to deduct the depreciation of the property's value over time, even if the property's market value is increasing. This means you can reduce your taxable income, paying less in taxes while your wealth continues to grow. Additionally, any improvements made to the property, such as renovations or upgrades, may also be deductible, further reducing your tax burden. These tax benefits make investing in rental properties even more attractive, as they increase the net return on investment. In 2024, with inflation and interest rates still global concerns, maximizing net returns is essential to maintaining wealth growth. The taxes saved can be reinvested to further improve the property, increase rent, or purchase new properties. Another significant tax advantage is the ability to defer capital gains taxes through strategies like the 1031 exchange in the U.S., where investors can sell a property and reinvest the profits into another without immediately paying taxes on the gain. This allows investors to continue growing their property portfolio and rental income without the immediate interference of capital gains taxes. Reason 4. Control and flexibility, decisions in your hands. One of the main advantages of investing in rental properties is the control and flexibility this type of investment offers. Unlike other types of investments, such as stocks or mutual funds, where decisions are made by boards of directors or fund managers, with real estate, you have direct control over your investment. This means you can make strategic decisions to maximize returns. For example, you can decide whether or not to raise rent, when to carry out renovations, or even change the use of the property to maximize profitability. If you own a commercial warehouse, you might choose to lease it to a long-term tenant who offers stability, or divide it into smaller units to diversify tenants and increase cash flow. In a shopping center, you can work on curating tenants, selecting those that attract more traffic, which benefits all retailers and increases the attractiveness of the location. This flexibility also extends to the ability to adjust your real estate portfolio according to market conditions. If the residential real estate market is saturated, you might decide to sell a residential property and reinvest the capital in commercial or industrial properties that may be on the rise. Or, if a specific area is experiencing a boom, you could choose to buy more properties there, taking advantage of the imminent appreciation. Another aspect of control is the ability to directly influence the value of your investment. Unlike stocks, where you are a passive investor, with real estate, your actions can increase the asset's value. A well-planned renovation or reconfiguration of space to attract premium tenants can significantly increase the property's value and rental income. This ability to directly add value is one of the reasons why real estate is so attractive to investors who want to play an active role in building their wealth. But now, let me ask you again. Have you ever thought about earning between $5,000 and $10,000 per month as extra income by creating simple videos for YouTube like this one? I have a complete and straightforward course that I developed for a single payment of $29.90. $29.90 won't make you richer or poorer. But what if this program works for you? Well, the link is in the first pinned comment of the video and in the About section of the channel, okay? If you're interested, just click the link to know more. But now, back to the content. Reason 5. Inflation hedge, protecting purchasing power. Another reason why investing in rental properties is not a waste of money is that real estate acts as a natural hedge against inflation. In 2024, with global economic concerns and rising prices in many regions, protecting your money's purchasing power is more important than ever, and real estate is one of the best ways to do this. When inflation rises, the value of money decreases, but the value of real assets, like real estate, tends to increase. This is because the price of goods and services goes up, and rents follow this increase, allowing property owners to adjust rents to reflect the new cost of living. This means that while living costs increase, your rental income also increases, protecting your purchasing power. Additionally, property appreciation during inflationary times means that the value of your assets is also protected and often increasing. This is particularly important in economies where inflation can quickly erode the value of traditional investments, like fixed income bonds. While the nominal value of these bonds may remain the same, their purchasing power can significantly diminish. Another important aspect is that if you finance the purchase of the property with a fixed-rate mortgage, inflation can actually work in your favor. Over time, mortgage payments remain the same, but rental income increases, meaning your profit margin grows. This allows you to pay off the debt with cheaper money over time while your income increases. Reason 6. Resilient demand. Rentals always needed. One of the most compelling reasons to invest in rental properties is the resilient demand that exists for rentals, regardless of economic conditions. Whether in boom times or recessions, people always need a place to live. Businesses need places to operate, and stores need spaces to sell their products. This makes the rental market a reliable and stable option for investors. During recessions, when access to credit may be restricted and people may hesitate to buy properties, the demand for rentals tends to increase. This is especially true in urban areas where the cost of buying property can be prohibitive, but the need for housing or commercial space remains strong. For investors, this means that the risk of vacancy is reduced and the ability to generate income remains solid, even in tough times. Furthermore, with the changes in work habits post-pandemic, such as the rise of remote work, there is growing demand for different types of properties, such as co-working spaces and flexible office spaces. Commercial warehouses and distribution centers are also in high demand due to the continued growth of e-commerce, which requires a robust logistics infrastructure. Investing in properties that meet these resilient demands ensures that you will have stable and, in many cases, long-term tenants. Established businesses, for example, may sign rental agreements for 5 to 10 years, providing a secure and predictable income stream. This resilience in demand makes the rental market a safe investment option, capable of weathering different economic cycles without significant losses. Reason 7. Growth and scalability. Potential. Expanding your portfolio. Finally, one of the most attractive reasons to invest in rental properties is the growth and scalability potential that this type of investment offers. When you buy a property and start generating income through rent, you're creating a cash flow that can be reinvested to buy more properties. Over time, this allows you to expand your portfolio, increasing both your income and your wealth. This scalability is one of the major advantages of real estate. With each new property acquired, you add a new income stream to your portfolio, which can be used to pay off existing mortgages faster or finance new acquisitions. This creates a virtuous cycle of growth, where your initial investments generate income that is reinvested to generate even more income. Moreover, real estate offers several ways to increase the value and profitability of existing properties. This can include renovations, improvements in tenant management, or even changing the property's use to something more profitable. For example, converting a residential building into a co-working space or dividing a warehouse into smaller units can significantly increase cash flow and property value. Another advantage is the leverage that real estate offers. With financing available at relatively low interest rates, especially in 2024, you can acquire valuable properties with a small portion of your initial capital. This means you can scale your portfolio much faster than would be possible with just your own resources. Investing in rental properties in 2024 is not just a way to avoid wasting money. It's a smart strategy to build wealth, protect your capital against inflation, and ensure a steady income stream. From regular cash flow and asset appreciation to tax benefits and the resilience of the rental market, there are countless reasons why this approach continues to be one of the best forms of investment. Now, I want to know, which of these reasons convinced you the most to consider investing in rental properties? Leave your comment below and share your thoughts. If you like this video, don't forget to hit the like button, subscribe to the channel, and for more tips on intelligent investments, watch the next video that's appearing on your screen now. See you next time. I'll see you there.